Your AI assistant is only as smart as your prompts. Are you getting the best insights for your investment decisions? Welcome to AI in Investment Research and Finance, your go-to source for turning raw financial data into actionable investment insights. If you're using AI for investment research but feel like you're just scratching the surface, this video is for you. Over the next 15 minutes, we'll break down the most effective AI prompting techniques in finance, helping you refine research, identify market opportunities, and sharpen your decision-making edge. AI prompting is not about asking, it's about guiding. To get meaningful insights, you need to structure your prompts with precision. Let's break down 4 key principles that will help you refine your approach and maximize AI's effectiveness in investment research. AI performs best when it understands the full picture. Instead of a vague request like, "Analyze Tesla's performance," provide necessary details. Summarize Tesla's Q4 2024 earnings call, focusing on revenue growth and guidance compared to analyst estimates. Context helps AI retrieve the right information and avoid irrelevant or outdated data. AI responses improve when you specify a role. Are you looking for insights from the perspective of an equity analyst, a risk manager, or a portfolio strategist? For example, instead of asking, "Evaluate Tesla's stock," try, "As an equity analyst, assess Tesla's valuation based on its latest earnings report." Assigning a role helps AI structure its analysis in a way that aligns with professional frameworks. Clear and direct prompts lead to more useful results. Instead of, "Tell me about Tesla's earnings," specify exactly what you need. Summarize Tesla's Q4 2024 earnings, highlighting revenue, profit margins, and future guidance. The more precise your wording, the more relevant the output. Broad queries can produce overwhelming results. By setting constraints like a time frame, specific metrics, or a response format, you guide AI toward a more structured answer. For example, compare Tesla and Rivian's Q4 2024 revenue growth in a 3-point summary. Constraints ensure AI delivers focused insights instead of unnecessary details. By applying these 4 principles, context, roles, clarity, and constraints, you transform AI from a generic tool into a precision instrument for investment research. Now, let's see AI in action. In this section, we'll compare ineffective versus effective prompts across key investment research areas. This live demonstration will show why asking the right question is crucial to getting useful insights. Let's start with financial statement analysis. Tell me about NVIDIA's income statement. This response is too generic. It doesn't specify a time frame or key financial indicators, making it less useful for investment analysis. Break down NVIDIA's income statement over the last 3 years, highlighting revenue trends, gross margins, and net income changes. Now we get a clear picture of NVIDIA's financial trajectory, helping us assess its performance more effectively. Next, let's examine market trends, focusing on inflation. A vague prompt like, "What's happening with inflation?" results in a surface-level response, offering only a snapshot of the current situation without historical context. In contrast, a well-structured prompt such as, "Compare current U.S. inflation trends with historical post-recession periods and summarize how central banks responded," prompts a more in-depth analysis. This approach provides a comparative perspective, helping us understand inflation within a broader economic framework. Now let's move on to valuation techniques. A prompt like, "Is Apple a good investment?" is too subjective and lacks data-driven insights. On the other hand, a more structured prompt. Generate a relative valuation comparison for Apple versus Microsoft using PE and PEG ratios considering the last 12 months of earnings. Provides a clear framework for analysis. This approach enables a data-backed comparison, making it easier to determine whether Apple is undervalued or overvalued relative to Microsoft. Finally, let's turn our attention to investment risks, one of the most critical aspects of making informed financial decisions. Without a structured approach, AI-generated insights can be too broad or generic, limiting their usefulness. Consider the following ineffective prompt. How do interest rates affect stocks? At first glance, this might seem like a reasonable question, but it lacks specificity. The response from AI will likely be too general, explaining that rising interest rates can impact market sentiment, borrowing costs, and overall stock performance, but without any in-depth analysis tailored to investment strategies. Now let's refine the prompt for a more insightful response. Analyze the potential impact of rising interest rates on growth stocks versus value stocks based on historical trends. This version adds precision, specifying two stock categories, growth and value stocks, and asking for an analysis grounded in historical data. The result? AI delivers a well-structured breakdown, highlighting past trends, how each type of stock has historically reacted to rate hikes, and potential implications for investors today. By structuring prompts more effectively, we can harness AI's analytical power to produce actionable insights, helping investors navigate complex financial landscapes with confidence. Generating high-quality insights is only part of the equation. To make informed investment decisions, you need to ensure that the insights AI provides are accurate, relevant, and backed by reliable data. AI can process vast amounts of financial information, but how do you know if its conclusions hold up? In this next section, we'll explore essential techniques for validating AI-generated insights, fact-checking outputs, cross-referencing multiple sources, and applying sensitivity analysis to ensure your research remains precise and actionable. AI doesn't have real-time access to proprietary research, breaking news, or insider reports. It works with available data, which may be incomplete or outdated. That's why fact-checking is essential before making investment decisions. By asking AI to analyze multiple sources, you can identify inconsistencies, uncover potential biases, and develop a more well-rounded perspective on market trends. Instead of relying on a single AI-generated response, cross-referencing different viewpoints strengthens the credibility of your research. But confirming different viewpoints is just the first step. To truly rely on AI-generated insights, you need to take validation a step further by cross-referencing them with actual market data, earnings reports, and analyst assessments. Without this, even the most structured AI responses can miss critical details or rely on outdated information. Let's say you ask AI to summarize Tesla's Q4 2024 earnings call. The response looks solid. It highlights revenue, profit margins, and future guidance. But how do you know if it's accurate? Cross-referencing with the official report reveals something interesting. AI states Tesla's revenue grew by 18%, but the actual report says 21%. The AI summary also leaves out a key comment from the CEO about supply chain risks. By prompting AI to compare multiple sources, you ensure the insights are accurate and complete. Even a small discrepancy can impact investment decisions. That's why validating AI-generated outputs against real-world data is essential. Structuring prompts effectively gives AI the right context. Cross-referencing multiple sources ensures accuracy. But even with verified data, markets remain unpredictable. That's why the next step in AI-driven investment research is running sensitivity analyses, testing different scenarios to understand how key factors, like interest rates, inflation, or earnings surprises, can impact stock performance. Let's take an example. Instead of asking AI for a single stock market outlook, refine your prompt to test multiple possible outcomes. With a sensitivity analysis, you can see how different stock categories react under varying conditions. For example, growth stocks may decline more sharply than value stocks in response to rising interest rates. Testing multiple scenarios enables you to gain a deeper understanding of market risks and potential opportunities. By structuring prompts effectively, validating AI-generated insights, and applying sensitivity analyses, we can transform AI from a basic tool into a robust decision support system. These three steps, contextualizing prompts, verifying data, and testing scenarios, form the foundation of a more strategic approach to AI-driven investment research. Building on this foundation, refining how you interact with AI can further improve the accuracy and relevance of its insights. AI prompting isn't just about structuring good questions, it's about continuously optimizing them for better results. In this section, we'll explore 3 practical techniques to enhance AI-driven investment research and maximize its effectiveness. Tip 1. Refine your prompt iteratively. If AI's response is too broad or vague, refine your prompt by adding specific constraints. By adjusting the level of detail, you ensure AI provides precise, investment-relevant insights. Tip 2. Use AI to identify blind spots. AI can highlight risks that may not be immediately obvious. Instead of just asking for a stock outlook, prompt AI to explore potential downside factors as well. This approach ensures a more balanced and comprehensive analysis. Tip 3. Combine AI with traditional research. AI is a tool, not a replacement for fundamental research. Cross-referencing AI insights with official reports, analyst notes, and macroeconomic data ensures accuracy and reduces bias. Blending AI with traditional research strengthens your investment thesis and prevents reliance on incomplete information. Mastering AI prompting is an ongoing process. By refining prompts, uncovering blind spots, and integrating AI with traditional research, you enhance the quality of your insights, leading to more informed, data-driven investment decisions. Even with structured prompts and refined techniques, common mistakes can still lead to weak or misleading AI-generated insights. Understanding these pitfalls and how to avoid them can dramatically improve the quality of your investment research. Let's go over 3 frequent AI prompting mistakes and how to fix them. One of the most common mistakes is asking vague, open-ended questions. A broad query like, "Tell me about Apple," often results in generic responses that lack investment relevance. To get a more insightful answer, be specific about what you're looking for. By narrowing the scope, AI delivers targeted insights that are more useful for investment decision-making. Financial markets change rapidly. If you don't specify a time frame, AI may pull outdated or irrelevant information. Instead of asking, "Analyze the stock market," define a clear time period to ensure AI provides insights that are relevant to your research. Adding a specific time frame improves the accuracy and relevance of AI-generated responses. AI is powerful, but overloading it with too many variables in a single prompt can lead to cluttered or incomplete responses. A better approach is to break down complex queries into steps, focusing on one company at a time before making comparisons. By structuring your analysis step by step, you ensure AI processes the data thoroughly and delivers clearer insights. Avoiding these common mistakes, being specific, defining timeframes, and simplifying complex queries can significantly improve the quality of AI-generated insights. With a more strategic approach, you can extract more precise, actionable investment research from AI-powered tools. As we've seen, AI is only as smart as your prompts. By structuring your questions with context, roles, clarity, and constraints, you transform AI from a basic assistant into a powerful research tool, one that refines analysis, identifies opportunities, and sharpens investment decisions. Mastering AI prompting isn't just about using technology. It's about thinking critically, asking the right questions, and making smarter investment decisions. The better your prompts, the better your insights. If you found this valuable, subscribe for more insights on AI in investment research and finance. Keep refining, keep learning, and keep making data-driven investment decisions.